By the end of this video, you're going to know exactly why you suck at the stock market, why your money is not doing what you think it's going to do, and how to get better in doing the right thing in the stock market. What's up, everybody? I'm back. I'm Chris, your financial coach, financial therapist, here to help you with some more money tips. As always, make sure you like and subscribe to the channel. Again, we're growing this year because we want to be a resource for you for all entrepreneurship and financial matters. So press the subscribe, hit like, share this video with somebody, because I know this one is really going to impact you if you take in the information. Today, we're talking about the good old stock market. Stocks are something that people believe will help them get to their promised land when it comes to their financial goals and dreams. The stock market has been used typically for us to be able to invest some money. Normally, if we don't have access to private investments or people that have capital, we've been taught to put our money into the stock market and allow it to grow over time so we can take advantage of that thing we call compound interest. Compound interest, for those of you that don't know, is why your money over time will out-earn you if you invest it properly. If you add interest, meaning you're continuing to grow and compound money, over time compounding gets faster and faster, and the little bit of money that you put in starting now turns into a lot of money down the line the longer you allow it to compound. But the stock market is more of a game. It's run by Wall Street. So there's some things we really got to know when it comes to the stock market. Are you playing it correctly? Do you know how to play it? These are all the questions that we're going to get answered in today's video. So just continue to stick around and let's dive into this. First things first, let's talk about the stock market. The stock market is what we call a midterm or a variable investment. What does that mean? That means as the market goes up, you make money. When the market comes down, you lose money. Now, this is a very 101 explanation of the stock market. Obviously, the higher you go, you get to a 202, 303, 404 level of money, there might be some ways to change some of this stuff. Higher levels you go, the more you can start to learn tricks and strategies to maybe mitigate your risk. So if the stock market goes down, you might learn how to make money in the stock market. The stock market goes up over a certain amount, maybe you make more than what the average return would be. But those are concepts that maybe you're not there yet. Maybe you are the average person that has a 401k or a 403b plan or a 457 plan. Maybe you have an IRA or a Roth IRA, or maybe you just have a brokerage account sitting with Fidelity or Goldman Sachs or Vanguard, and you're just putting money away in maybe a bunch of different stocks. Maybe you don't know exactly what you're doing. That's why we're here to clear this up. But a variable investment means when the market goes up, you make the money. When the market comes down, typically you're going to lose the money. Now, obviously, the stock market goes up and down according to what's happening in the economy and or what's happening with that specific company. But just know, whatever the market does, typically your money is going to do. So in 2008, when people had a lot of their retirement money sitting in the 401k and retirement accounts that are like that, they had no control over the market. And what happened? The market crashed, right? We went into a major recession. People lost upwards of 40-50% of their retirement accounts. There's a joke in the financial world that your 401k turned into your 201k. Right? You lost half the value. But yet we're here in 2024, 16 years later, and the stock market's still rolling. People still putting money into their 401ks and IRAs and those things. But just like we always train you and teach you here on this channel, you got to make sure that you're educated on what's happening. So first thing you want to know is that it is a high risk, high reward type of investment. You might have a 401k or something that says, you're moderately aggressive or very aggressive or you're very conservative. Those are all just terms that they've used to continue to lure us into these products without being properly educated on them. But regardless, whether you're conservative or whether you're aggressive, the market crashes, you're still going to lose money. So I'm always going to teach you, if you want to play in the stock market, you have to learn how to do it the right way. Most people pass their money off to Wall Street. So in your 401k or your IRA, if you have a collection of stocks, normally known as a fund, maybe a mutual fund, but normally it's known as a fund. If you look at your fund, you're going to have a lot of different stocks that you're invested in, a lot of different companies. Many of them you won't know. it's upwards of 100 plus companies that you're invested inside of. Some of those companies might be doing great things for the economy or the environment. Other companies might not be doing great things for the economy or the environment. However, your money is still going there. And you don't have control over the mix of companies that are inside of that mutual fund, right? You don't have control over the mix of what's inside of that mutual fund or that fund. That is done by a fund manager. A fund manager is the one that says, you know what, we're going to take out this stock and we're going to put in this one. We're going to take out this company and put in this one. And you just keep sending them money, hoping that your money will continue to grow in the right place. So in 2024, we're going to take more control over our financial life. Specifically, we're going to take more control if we're going to give our money away to companies in the stock market. Just know, ladies and gentlemen, the stock market is not the only way you can grow money. There's plenty of ways to grow money. We'll save that for another video where we talk about the different asset classes and actually how to grow money, maybe on a 202 or 303 level. But again, just on a 101 basic level, you don't want to just ship off all of your money to Wall Street, to the funds that you offered at your job, and then expect that to bring you great returns. So I'm going to teach you the Warren Buffett method. Warren Buffett, one of the greatest investors of our time, teaches how to buy stock. Now, first things first to know, a stock is buying a piece of a company. That's what it is. If you want some language around it, a stock is buying a piece of a company. A bond is lending your money typically to the government. So if you buy a piece of Apple stock or Microsoft stock, you are buying a piece of Apple or Microsoft. If you have a bond, you are now giving your money, you're lending your money to the US Treasury or a part of the government. That's where bonds come from. Municipal bonds are like city, it goes to the city or the local government. You would lend them money so they can fix a park or a road or something like that, okay? But that's the difference between a stock and a bond. So if you want to play in the stock market, again, right? These are companies, publicly traded companies that are there. Warren Buffett suggests that you know three things in order to pick a good company. Because again, we're not just picking a stock, we're picking a company. And Warren Buffett has invested in the same 7 to 10 companies for the lifetime of his portfolio. Why? Because once you find a good company, it makes sense to just keep pouring into that company. That's his philosophy. It doesn't make sense to spread it out over 100 different companies and getting, 0.5% of each company. Once you analyze and find a good company that you believe in, that you would purchase, you just keep evaluating if that's still a good company. If it is, then it'll keep giving you returns and you keep putting money there. So 3 things Warren Buffett recommends that you know. Number 1, he recommends that you understand the industry of the stock that you're buying. Lots of different industries in the stock market. The question is, what do you know? Everything about investing wisely is about specialized knowledge. If you're going to invest and you want to have a return, you don't just want to gamble your money, you don't want to just risk your money in things that you don't know. What you want to do is you need a specialized knowledge. So the knowledge that Warren Buffett recommends you have is knowledge first and foremost of the industry. So is it hospitality, food, technology, energy, natural gas? There's a lot of different companies inside of the stock market that hit a few different sectors. So the number one thing Warren Buffett wants you to know is, do you know the industry? Do you understand it? This is basic understanding of what a successful investor will tell you. If you don't know the industry, then it doesn't make sense you invest money there. Now, I know this might go against some of what you're currently doing. That's why I said I'm explaining to you why your strategy is probably not going to work over time, is because many of the things we might hear are, oh, if you buy it, then you should invest in it. If you buy Starbucks, then you might as well invest in Starbucks. Some of you don't buy Starbucks now at all, right? If you buy Nikes, then you should invest in Nike. If you have an Apple Watch or an iPhone, then you should invest in Apple. If you bank with Wells Fargo, then you should go ahead and invest in Wells Fargo. That is not the method of buying a good business. Why? Because you actually don't know anything about that business. Just because you own an iPhone doesn't mean you understand the technology industry. Just because you bank at Wells Fargo doesn't mean you understand anything about the financial services industry. So Warren Buffett's going to recommend, number 1, that you know the industry. If you come from the tech space, if you've built in the tech space, you got a degree in the tech space, you study it, you follow it, then it might make sense to invest in some technology companies because you'll have understanding. If you know nothing about natural gas or energy and you've just read 2 articles and watched 1 YouTube video, then that might not be the sector that you want to invest your money in because you would not know how to pick a good company. You don't know the industry. So number one, know the industry. Number two, he says, you've got to know how to read financials. This is where the financial literacy, financial education comes into play, because you have to learn how to read financials. Every company on the stock market is a publicly traded company, meaning they will show you their financial statements. Every quarter, they have to put out something called a prospectus. If you go to their website, at the bottom, you click Investor tab. It'll pull up all of their last prospectus for the quarters. You can open one up and see everything that that company did that quarter. Their balance sheet, where they spent their money, their expenses, how much cash do they have on hand, how much debt do they have. Then you can also see what the projections are. What is it that you're looking to do? What are you forecasting? What's the mindset? Normally the CEO or a president or a board member releases a statement that says, here's what the company's doing. But more importantly, you got to learn how to read the financials of that company. How do you pick a good business? Is by knowing what the financials are. How would you know if a company is good or not if you never see their bank account? If you never see how much they did in sales? If you never see how much they spent on labor? If you don't understand how much they put towards research and development? How would you ever know if they're a good company? Again, you're just guessing, you're hoping. We're not using that as a strategy in 2024. So you have to learn how to read financials. I recommend you go, and if you want to invest in the stock market, start reading some of the financials of your favorite companies. Go to Apple, go to Microsoft, go to Nvidia, go to any of these companies that you are looking at and read it. How much sales did they make last year? What's their expenses? Are they making money? Did they lose money last year? Over the past 2 years, did they make money or lose money? You'll be able to see that if you learn how to read the financials. Number three, third thing Warren Buffett says you should know is you should know the management team. You should know the leadership. You should know who runs this company. What is the CEO's philosophy? What's the CMO, the CFO? What's the board's take on where the company's going, where the industry is going? What's their vision? How are they moving? How are they pivoting? This is how you would evaluate if this is a good company or not. If there's bad leadership in place and you're like, oh, I don't like that guy's morals, or I don't like the way that lady talks about her her staff, or right, the way the market's going, well, then maybe that's giving you a sign that this probably isn't a good business long term. This might not last for another 5, 6, 7 years because they have bad leadership. Well, guess what? All this is public information. You can find out who the CEO is. You can watch some of their stuff. You can read the prospectuses so you can see exactly what they say. That's how you would evaluate. You got to get to know the leadership of the company. So Warren Buffett will tell you that those are the three things that you need to know. You need to know the industry. You need to know how to read the financial statements of the company, and you need to know the management team. If you understand those three things, you can make an educated decision on if you should give your money to that company, meaning buy a piece of it. That is the proper way to buy a stock. Don't just buy it because you wear it. Don't just buy it because you saw a guy on YouTube talk about it. Don't just buy it because you have a hunch. Most importantly, don't just ship your money off to Wall Street thinking that it's going to make you money, when more times than not, there's tons of fees and just information that you don't have. So you've got to know those three things if you want to play the stock market. Now, I know for some of you that what I just explained, you're like, Chris, I don't want to go through any of that stuff. I don't want to deal with it. I just rather put the money somewhere and then just figure it out. If that's the case and that's you, again, Warren Buffett tells you, just put your money in index funds. That's what he said. He said, instead of you wanting to pick the best company and look at the management team and learn to read all the financials and do all of that, he said, just pick some solid index funds. An index fund is going to give you basically the index of a market or of a sector. So you can take the entire S&P index, which basically says you're taking all of the top 500 companies, and just whatever the change is of the index, you're gonna be able to get. Or you can take the healthcare sector, or you could take the energy sector index, or all different types of sectors have their own index. So you could just choose 1, 2, or 3 of those, and typically Warren Buffett says those will outpace the market. You will get better returns if you just set it aside inside of an index fund and just continue to put it away there. That way you don't get the swings and the shifts in the market, and you have more than just one company or 4 companies that you're invested in, maybe you're taking a look at an entire sector that maybe you know a little bit better or you believe in a bit more. But at the end of the day, ladies and gentlemen, we don't want you gambling with your money. And if you are putting money into some type of IRA, 401k, 403b, just random brokerage account with some mutual funds in there, you are giving your money away to Wall Street and just hoping and wishing that that money is going to grow. In 2024, you need to get your financial knowledge up so that you can make educated decisions with your specialized knowledge around how you're going to wisely invest your money. And this is why most people don't do well in the stock market, is just because they don't have a specialized knowledge. So we gave that to you today. Drop some questions in the comments below so that if you need your question answered, your specific question around any of this topic around the stock market, we can answer it for you. And remember, this is the 101 level. This is for the basics. There are ways to grow on this side of things, but you always got to start with the foundation, the fundamentals, and then be able to build on it. So until next time, y'all, take care. Peace.